I'm very dubious around the ability to kind of make a derivative of Bitcoin. So the good example that should be easier to kind of get your head around is the gold market, right? There's a certain amount of gold that we believe exists above ground. Of course, like the recent chatter around actually auditing Fort Knox is fascinating. And, do central banks actually have as much gold as they claim? I don't know. And let's try and find out over the next kind of, 6 to 12 months. But the point being is that when you look at the amount of derivatives of gold, there is a lot more paper claims for the physical amount of gold that exists. And I can't remember what the leverage is, which is annoying, but I feel like it's massive, right? There's like 10 or 12 times the amount of paper claims for physical gold. And the physical gold market's valued at like roughly $18 trillion US globally today. So like total above ground gold that is claimed to be there is a circa $20 trillion market. And for the Bitcoin bulls, it's like, okay, well, Bitcoin's digital gold. I actually think it's a 10x on gold in a number of different ways. It's the ability to transfer value over space and time that shits all over gold. Like gold is good at holding value over time, but it's not very good at sending it across space. How do you chop up a gold bar? It's really difficult. And it was that failure of gold in some senses to actually facilitate trade that silver, was very useful, right? Even bronze coins. But as soon as that happened, you had to trust someone to send the gold across space. And like Lynn Alden's book, Broken Money, is fascinating for this and basically points out very nicely that the development of telecommunications technology was the day that gold failed, in a sense, because you cannot wire gold from Australia to New York on a phone call, or on a telegraph even. This has been happening for 100 years roughly. And that's fascinating, right? So it's like, okay, well, what's going to actually happen? Okay, Bitcoin's better than gold. Gold's worth 20 trillion. Well, let's imagine like a total addressable market calculation. Like, well, Bitcoin could just eat the whole of gold. Why not? And I don't necessarily calculate that as my bullish price for Bitcoin, but like, let's ask that question. Could Bitcoin completely replace gold as a monetary item? Well, why not? If it's better at sending money over time and sending money over space, well, what's the point of gold? I would argue in many ways, like we're just still so early on Bitcoin that the average person still associates gold as being valuable money. But the day that they go, actually, hang on, the fact that I can walk around with my money in a seed phrase in my head rather than this big gold coin in my pocket, well, that's way better because it can't be stolen from you and you can send it anywhere at any time for a fraction of the cost. It's like, whoa, this is super powerful. But we're not there yet, right? The fact there's still a $20 trillion market cap on gold tells you that. It also, of course, has a capacity to be used in jewelry and in electronics, etc. So it has a more of a utility value too, which would mean that it doesn't completely disintegrate in market cap. This brings me nicely to then really think through like, well, how do you value, like I touched on before, how do you value a company? Well, there's lots of different ways. So net asset value is one thing to look at. Like, what does the company actually own? But then you can look at revenues. It's like, okay, how profitable is this business? Are they keeping their costs down? How much debt have they taken on? If you're doing early stage investments, you're not really looking at data per se. You're actually thinking, okay, does this person have a big potential to create a world-changing business? And what kind of market size are they getting into? And okay, I'm gonna put some money into this early stage, highly risky, very illiquid bet, but I think the outcome chances are higher than the potential downside. Okay. Point is, there's lots of different ways to value businesses, whether it be the balance sheet, whether it be the operational side of the company. And what FASB is doing is basically changing the landscape. And so for people that are actually watching, they're able to make decisions based on that. And it's cool in that it's probably a fairer. Actually, is it fairer to say that Bitcoin gains equals revenue? I think I don't agree with that, thinking about it, which is interesting, right? So it's an accounting wizardry. So this massive bull market that we might see in MicroStrategy stock, is it just vaporware? And the thing that then brings me to nice is like, depending on how you look at valuing the company, that's up to you. Your value of something is subjective. So you're going to make a decision based on what you see. Maybe it's just a traditional value investor that comes along and says, look, I think the price to earnings is actually, this is a good buy. Let's do it. The capital growth potential is absolutely fantastic, and it's worth doing for that reason alone. But there's the upside and also the downside. And so how MicroStrategy specifically is able to navigate that process of a Bitcoin bull market and then the inevitable sell-off, right? It's not going to happen. I think anyone out there that tells you that Bitcoin's going up forever doesn't actually know what they're talking about. And that's very simple, because it's like pushing something underwater. You can push it under a little bit and it pops back up. You can push it back under more and it pops back up. You push it back even further and it pops back even further. That, I think, is going to be the route to market for Bitcoin in terms of price action. It's constantly going to be volatile. And that's because humans are volatile. And also the idea that it's a completely inelastic good, right? If the gold price goes up, we mine more gold. If the silver price goes up, we get more silver. If the grain price goes up, we create more grain, like the classic kind of commodity picture. It's like, well, if the Bitcoin price goes up, you can't make more of this stuff. And that's where there's something called a Veblen good. It's particularly prominent in the luxury market. So, there'll be basically 2 or 3, let's think about it like this. Or I heard recently, actually, so Rolex produce 1.2 million watches a year. Does that sound a lot? Or does that not sound very much? Other competitors of theirs in that ultra luxury watch space produce half that or a quarter of that. But the demand for Rolex is so high that actually there's a certain subset of those Rolexes produced each year where they're done in such a small number that people buying them buy the most expensive one. They specifically are trying to buy the most expensive one. So, and that's what a Veblen good is. Basically, as the price goes up, the demand goes up. And that's what Bitcoin is. So I'm chilled. I'm sitting in Bitcoin self-custody. I'm looking at all these different reasons why I think that's a good bet. And I don't really need to care about what's going on in the public markets. And neither should you. And I think that's the base case, like get to that point. But then the next part is like, well, how do you outpace the hurdle rate that's Bitcoin? And that's where things like this information about FASB coming in are really interesting. Like, will the behavior of these publicly listed companies shift because of the fact they can access Bitcoin more easily with an ETF, and equally the fact they can look at Bitcoin gains as a form of revenue, which has an impact on their equities, which undoubtedly, shareholder value is what these CEOs are trying to drive. That's very enticing. So we could be in for one hell of a bull market over the course of this year, which is not really in line with the current market sentiment. And that's why I think right now, like it's the 19th of March as I record this, right now is a good time to be thinking about buying some Bitcoin and just sit on it, see what happens. I'll leave you with one final point. I prefer to keep my capital in a system in which it is ruled by rules and not by rulers. And that is a massive, massive change versus what the status quo traditional financial system actually represents.